Hello, I'm Liz Lumley of Finextra, and we're here at the BSA annual conference in Manchester, and I'm sitting down with David Rimmer of HP. So, very good. So I'm going to give you a little bit of a hard time with the first question, only because we had a bit of a chat at the booth yesterday, and you talked about a lot of your views about how digital is impacting banking and financial services, and this whole sort of digital revolution has made a lot of column inches in the press, how it affects retail, how it affects a lot of customer-facing industries. And you made a comment to me where you said that you thought that digital's impact on banking, and of course we're at the BSA conference, Building Societies Association conference, was still in its early stages. And I'm thinking that there might be a few people in the industry that would disagree with that assessment, that we're still in the early stages of its impact. So, I mean, what do you mean by that?
I think I'd say that for a couple of reasons. The first is that if you look at most of what's been done with digital so far in banking, it's been doing what people do today in a different way. It's been digitizing the current business models. And I think what we're starting to see is the next stage in kind of digital transformation, which is where the whole business model changes. So if you look at something like peer-to-peer lending, that's absolutely fundamentally different from the way that banking has worked quite literally for the last 2,000 years, where money goes into a bank and then he lends it on to somebody else. Well, actually, peer-to-peer lending, the bank is actually just an intermediary. So that's a fundamental change to the banking process. And then if you look at things like the new pay-in service, where people are paying with a mobile phone to another mobile phone, again, it's quite fundamentally different to the whole concept of what's behind the payment, how it works, the system that you actually use. And I think what we'll see is the banking models progressively rethought, as opposed to the first step, which is digitizing what we do today. So that's one reason. The second reason is that if you look at the industries that have had the biggest impact of digital, and I say media and entertainment would be an example, print would be another example. These are industries where all the content is about information. And so that's why you can look at something like music has been absolutely fundamentally changed in terms of how music is produced and distributed, etc. The whole value chain, everything has changed. With iTunes, just the most obvious example. And if you look at banking, actually, it has all the same characteristics. Fundamentally, all the inputs to a process are information, and all the outputs as well. So it has incredibly high potential to be digitized absolutely completely from end to end, in a way that, to take an extreme example, you can't digitize farming beyond a certain point. You've got physical crops, but actually in banking, it is inherently an information-based process, and therefore the potential for complete digitization and new business models is much more profound. So I think we're only in the relatively early stages. And I think the biggest barrier is around, to moving to the next stage, is around consumer adoption, and to a certain degree around the a lot of the legacy banking providers not necessarily, frankly, getting the plot and sticking with yesterday's model.
So it's sort of like you're arguing we're not at the early stage of the financial services realizing the impact of digital. We're at the early stages of that journey, of that complete change.
Yeah, so I think typically the first step in digitization is that people take the processes that they have today and they start to digitize them. And actually that's more or less what's happened now. Because if you look at online banking, what are we doing? Actually, it's not fundamentally transformationally different. It's just looking at your statement online, it's doing transactions online. Okay, there is a self-service element. It is different in that regard, but it's not a fundamental change to how banking works. And that's something that we've seen in other industries as well. That's always the first step. The next step, as I say, is when the business model changes, the essence of what you do and how you do it changes.
So you mentioned, you brought up peer-to-peer lending, and there's a lot of debate about what defines a bank today, whether it's a regulated institution that takes deposits, and there are a lot of challenger banks and alternative finance who call themselves banks, but might not necessarily be traditional banks.
Yeah.
But sort of that journey that you've described with the first question, in the future, will there be a redefinition of what we consider a bank then?
Yes, I believe so. So I think if, whilst there have been some differences between Bank A, Bank B, and Bank C, I think there's been a common model of what a bank is. A bank has branches, it offers a certain set of products, it's a regulated entity, it has certain sets of systems, it has a certain bunch of internal processes, and there's been a kind of like a recognition of what a bank is. And I think that almost every single aspect of what a bank historically is open to challenge. So you look at a lot of entities now that call themselves banks, they aren't actually regulated as banks. You look at some of the core banking products and services like payments. You look at, say, something like PayPal, the biggest payment system now, it's not a bank. You look at the idea of branches. Do we need branches? Well, not necessarily. We have online-only banks setting up now. You look at a lot of the assumptions that are then driven from the fact that, well, we're going to have a current account. That means I'm going to have a current account banking system, but actually you don't necessarily need any of these things. So I think what we'll see is, yes, a redefinition of what a bank is, but not necessarily a single model as to what a bank is, and that different people will decide, have different strategies and different channel strategies as a result, and we'll have different, a whole bunch of different models. We call it new styles of banking around what a bank is and what it does and how it serves its customers.
So you've laid out all these sort of new players that are going to be in the banking business in the future. So taking it back to the traditional players, what do banks and building societies need to do to stay in the banking business in the future?
Well, I think the whole of this digital area is something that they're going to need to think about absolutely fundamentally and work out where they want to play and what services they want to offer, because particularly for some of the mid-tier players, the idea of, well, this tier one bank's doing that, so we'll do the same. This tier one bank is doing that, so we'll do the same. It's just not affordable. So I think they're going to have to make choices around what they're going to look like as a building society, what they're going to look like as a bank, and then follow that through, but be quite selective in terms of where they choose to invest. Are they going to be an online-only society? I think that's where they're going to have to go.